Welcome to Ainslie News, Monday 17th of August. Big news over the weekend. Wall Street titans turn to gold. Warren Buffett has earned his legendary reputation by being a value investor through his famous fund, Berkshire Hathaway. He's had a knack of picking shares that have fundamental value, not trendy momentum or growth shares. Buffett is famous for saying, "We simply attempt to be fearful when others are greedy and be greedy when others are fearful." When the second quarter shareholdings reports, the SOL, called 13Fs, were released on late Friday, we got to see who had done what. And clearly Buffett is not yet seeing the fear, as he's bought very little in the quarter and offloaded a lot. That shouldn't be a surprise, as shares are nearly at all-time highs again, despite the pesky fact of a recession. However, it was what Buffett sold and what he bought that should have had investors paying attention. He dumped big banks, including JP Morgan Chase, by 61%, and some others such as Wells Fargo, and completely exited his shares in Goldman Sachs. The market is reading this as his concern of the oncoming loan default and insolvency wave many are now expecting. But it was what he added that had the weekend media aflutter. $565 million worth of Barrick Gold shares, the world's second biggest gold miner. The message of dumping those managing fiat currency and buying those mining real money was not lost, and the message it sent can't be ignored. Buffett has long been a critic of gold, and it doesn't yield or produce output, two of the cornerstones of his investment philosophy. However, even the so-called Oracle of Omaha can clearly see what's coming, and buying shares in a miner at least helps mask his backflip. This is the first time he has invested in gold, and the gravity of that cannot be understated. Buffett did, however, invest in silver before it last rallied in 2011, and it will be interesting when the Q3 13Fs are released to see if he has taken up a silver position now that the metal is on the move again. These same 13Fs also revealed that the world's biggest hedge fund, Bridgewater, also increased its holdings of gold, adding more than $400 million into gold ETFs. This increase takes Bridgewater's holdings in SPDR Gold Trust to $914 million and iShares Gold Trust to $268 million, totaling $1.183 billion of gold held by the fund. The fund itself increased $1 billion in the quarter, taking its total funds under management to an incredible $5.96 billion, and notably taking the gold share of the fund to 20%. The fund's founder, Ray Dalio, has been vocal for some time as to the need for gold in a portfolio prior to what he called the paradigm shift, and the coincidence of this and the growth of that fund are likely linked. And as he famously said, if you don't own gold, there is no sensible reason other than you don't know history or you don't know the economics of it. Big news there with Warren Buffett coming on board over the weekend. Let's see how much more volatility we can get into this market. I hope you enjoyed today's news. You can always jump into ainslieBullion.com.au for all things gold and silver, Ainslie Wealth for all things cryptocurrency, and check out our gold and silver backed cryptocurrency token at goldsilverstandard.com. We'll catch you tomorrow.